Invest. We talk about investing, finance, and professional development for today's items only. The investment gonna talk today will be Ethereum. First, I want to say happy Sunday, everybody. Have a great weekend so far. Respect to recording time of 10:17 a.m. on the Eastern Time. Ethereum currently trading $3,856. That's about 0.60% so far. On the overall crypto market, besides Solana and Algorand, seems like it's kind of trade on a sideways fashion. Not that active today. And respect to Bitcoin is currently down about 0.39%. Ethereum is currently down 0.58% respectively as well. While on the selective altcoin, Dogecoin is comparable, Cardano is also comparable, but seems like Solana, per our technical analysis, seems like, the bullish trend as we are still forming that curvature on that golden cross is still enduring, and that's the reason why we're still leaping up to aim at the next level of the $175 mark, which is the next technical non-substantive resistance consolidation zone, right? And Algorand is kind of having a drag effect at the same time. If you look closely, it seems like we are, continue to form that curvature, but with respect to the, how long-lived is this going to be, I would say is relatively not. It's going to be, I think ideally hitting the next level of the 195 or basically close to $2 mark, which is a monumental substantive consolidation zone, which we have seen a lot prior. That once we get there, I think investors are going to be incentivized to sell back down, knowing the fact that there's a lack of historical consolidations that allow us to continue to build up the financial assets, specifically Algorand, in an architectural perspective. So with respect to the main coins that that are driving the market, with respect to Ethereum and Bitcoin, it's not that active, and it really translates into the news and the media affectation that we've been enduring for the last couple of days so far. But it seems like on today's Sunday across the world, and I know it's like already Monday in selective, part of the region in the world, overseas. Obviously I'm from North America in New York on the East Coast. On the news front, it's not that active. I would say the last news that came out was about 24 hours ago, talking about, from Market Watch, about where's crypto headed after the Bitcoin recent rally, right? And this is another news that we've talked about last time, but this seems like this is another regurgitation type of news discussing the outlook, right? And, already based on the title of the article is kind of, pointing more towards the negative side of the spectrum. It's like, oh, that rally is already history. Are we going to keep leaping? Based on the verbiage on the article, it seems like that's something that they're pointing more downward trend going forward, saying that the rally for Bitcoin is not going to be sustainable, and which translates into the kind of hovering on a sideways fashion, with Bitcoin kind of trending on a sideways fashion, around the $60,000 level, which technically is a substantive resistance level, right? So beside that news, there isn't any other news that is active. Seems like probably the press or the media side is kind of hibernating at the moment. I guess we give them a break because it's Sunday. But for us, we are investors and we're never taking a break. So we have to take a look at the technical analysis to see how we're trending now, right? So let's go straight into the technical analysis after that news that just happened. That's basically the only selective news that's worth mentioning at the moment. So it seems like, we are hovering around the resistance level of the 3,850, which is the level that we've talked about many, many times before, right? It's either we go, all the way to the 3,472 or the 3,850. And it seems like we have chosen to go to that area. So this is an important level for us to watch, right? Because if we don't, sustain this current level and we break the support, right, we'll basically go back down into the original level, the 3,475. And then ideally, if we break that as well, which is, technically the 3,475 would be a logical level dollar cost average at. But if, because of the fact that we're overbought right now, that I believe that if we are going to cross down, as we come back down to 3,472, we will be back to like the 55 area right now with the 70 right now, right? So ideally, again, 3,150 would be a better level dollar cost average at. And I think if we even get so lucky and deplete all the way to 2,750 as we break the $3,000 zone, which as you know, that's not a substantive level, right? 3,000 just a flat number. That ideally to dollar cost at 2,750, 2,450, and by then the RSI is going to deplete below the 40 or 45 mark, and ideally dollar cost average around like 35 or below 35 of 70 RSI zone, right? And I think the sell-off is already, kind of, foreshadowing at the moment. We see some sort of a curvature. You see the well back and then some sort of a well back that's forming again. And the drag effect that you see this curvature right here is because of the Bitcoin effect, the ETF that's expected to debut in the near future. Obviously it's still non-confirmatory on the date specifically, but something that we have observed, and it seems like that curved up, but now we are basically cooling back down because of the lack there of news that's supporting the current momentum at the moment, right? So that's the technical on the Ethereum. On Bitcoin, let's take a look at it real quick. We are basically, still in the air. We're at the 76 out of 70, so I don't have to explain again. We are extremely overbought. And I think the wellbacks already formed, and I think the apex was the 63,000. Basically, we were trying to attempt to get to the 65,000, but we were $2,000 short, right? And extremely overbought right now. So we basically try to, recreate history. But, if we were at the level of, let's say, 44 out of 70 right now, I'll be like, yeah, we're breaking way above all-time high then. But because of the fact that we already overbought significantly, we're already, forming a well back, and there isn't any substantive, like, positive bullish news that is going to be propelling us going forward. I think the key catalyst beside the ETF would be the FOMC meeting that's coming up in November, which technically we still have about a couple weeks out, right? So something that we have to be cautious about, that whatever goes up really, really fast comes down just as fast. So ideally, I'll probably hold off and wait and watch on the sideline and wait until we come back to the more of a normalized zone of 43, 40, 37, 34. I currently have 3 Bitcoins, so I think for the ones that already have a sizable amount, just maybe take some profit is not a bad idea, because the setup is relatively bearish at the moment, despite, we're in a bull cycle, but we need to correct slightly for us to continue the rally from there, because the monetary supply has to come from somewhere, right? Dogecoin, let's take a look closely. You can see that, with respect to the curvature, we form a golden cross. That's the reason why we leaped up. Right now, we're curving back down, so we are still overbought the 50 out of 70. So ideally, dollar cost average at the 21 and the $19 level would be better. Cardano, we are, comparable to Dogecoin. We're still curving down, but the sell-off is not going to be as severe in comparisons to the other coins like Bitcoin and Ethereum respectively. I think ideally dollar cost average to 210 and 205 would be better level. Solana, we up about 3% right now. And with respect to the momentum right now, as we have mentioned to you guys, that the curvature is going up right now. So this is a bullish setup, and ideally dollar cost average right now would not be the most ideal. But if you want to do it now, I think it's better opportunity in comparisons to the other 4 that we just talked about, because we are forming a curvature now. And we are going to see some bullish momentum to retest basically up around like the 175 and high as even like close to 200 if the bullish momentum is going to be more significant, because we do have some room to run up to, right? We're still at this 55 out of 70 and we're forming a golden cross. So something that we might want to look at, Solana seems like it's a bullish setup right now, but the bullish setup is not going to be like a astronomical bull surge, if you may. XRP down about 2.17% right now. We are forming a well back, a relatively large one as well, with the 60 out of 70. So ideally, dollar cost after 110 and 101 would be better. I think 101 would be a more optimal level for my risk aversion. Polkadot seems like it's still extremely overbought, 65 out of 70. We're forming a well back, curving down right now. So ideally, dollar cost at least at the 35 or the 33, and then ideally at somewhere around like the 25 would be a better level to dollar cost average at. Algorand 1.84 right now, and with respect to the curvature, we form a golden cross. That's the reason why we surged up all the way to the peak of 208. Basically the $2 mark, and people immediately canceled out, and you could see that subsequent sell-off, more of an escalated downward curve, and we've been struggling. And we're at the 56 out of 70 right now. And right now we are basically struggling by the public investors, not really by the whales. And I think the sell-off will be imminent. And right now it's not the best setup either. I think ideally dollar cost after 165. But ideally for me, I think 150 would be a better level, as that would be the technical bottom based on the technical charts that we see in front of us. So with respect to market cycle, I know it's not the most obvious. We definitely need to like watch out for it. It seems like we might have skipped a couple of steps in the market cycle as well, as we've been keeping tabs, right, following the trends, right. But it seems like there are sometimes that there's this out calculation that if there's a monitor supplies, that institutions are they want to be buying in and start pumping the market. It could completely form an outlier into the market cycle. It seems like we are back to square one, if you may. So we definitely want to keep an eye out on. And again, I'm not perfect, and the chart and the psychology versus what we see in the market right now is kind of shifting, and it's shifting away from the historical trends, on how the course of the movie is supposed to be playing out, right? But ultimately, we're in the business of risk mitigation, so we have a secondary, not the secondary, I would say the primary way of investing would be look at the consolidation dollar cost average levels, right? And the level will be at the identified level here for the respective coins, right? Again, these are my risk management levels to dollar cost average at for my personal risk aversion. This is not for everybody. I know everybody have different ways of investing. Some people are more long term. Some people want to just buy now and chase for the pump. But for me, I'm just looking for more of a substantive level that I feel comfortable, that I feel safe, and I can sleep well at night type of investment opportunities. And these are levels for you to dollar cost average for your reference. So hopefully this is helpful. Hope you guys have a great rest of the Sunday. I'm probably going to go biking again on the typical Sunday. It's relatively nice in New York City today. Really appreciate you. Feel free to give me a shout if you have any questions. And stay tuned for some help. Take care.